Delta shares once higher after the initial reaction to the earnings report for the September quarter are now lower by about 2% here. The airline reported record revenue in the third quarter. I had a chance to speak with Delta Airlines CEO Ed Bastian on those results. Take a listen.
I'm really proud of the great job that our team did during what clearly was a challenging summer travel season. We had highest quarterly revenues in our company's history, and that's despite the fact that we operated only 83% of our available capacity. And just as importantly, our team has fully restored our operational reliability, the performance that our customers come to expect from Delta, and leading the industry along the way. And one evidence of that is that in over the last 45 days, excluding, of course, the impact of the Hurricane Ian for a couple of days, we operated over 120,000 flights, yet only had 108 cancellations in total. So team's doing great. We're looking forward to a strong close of the year. Holiday bookings look good, and we're excited as we bring travel back.
You know, this time last year, of course, returning to a quarterly profit for the first time since the start of the pandemic. Revenue just 2/3 of 2019. This year, though, you fast forward, quarterly revenue of $12.8 billion on 17% less capacity. What were the major catalysts for the quarter from your perspective?
Tremendous demand from consumers, return of business travel to significant levels. In fact, the international markets are reopening, and more important than any of that is that consumers are prioritizing investing in themselves and experiences and service rather than buying things. And so that shift from goods to services is a huge driver of our overall demand profile.
When you think about the capacity, is it a priority for Delta to restore full pre-pandemic capacity, or do you believe that we're heading towards a new benchmark even for capacity normalization? And if there is a new benchmark, what would that signal for airfare pricing?
Well, our priority is for the next 6 to 9 months to do exactly that, is to fully restore our network to its full capability, which we expect to be in place by next summer. We have the assets in place. We have the people hired. We're ready to go as soon as we can be confident that we can deliver that added supply with the quality and the reliability that our customers come to expect of us. We saw what happened earlier this spring when we pushed ourselves a little faster than we thought we could, and the reliability suffered. So I'm confident we can get there by next summer. And as we bring that additional capacity back, that's going to help probably take a little bit of the pressure off of pricing for consumers. But more importantly for Delta, it's going to enable us to get much better cost productivity, and we'll be able to pass along some of that cost savings onto our customers.
On the demand front and what you're seeing from customers right now, any insight you could provide as to bookings related to the December quarter guidance that you had released, especially as we're getting ready to go into this holiday travel period too in just a few weeks?
The demand in the fourth quarter looks strong. The booking traction we're seeing is consistent with the momentum that we've built over the course of the last 3 or 4 months. Travel for the Thanksgiving and the coming Christmas holidays are quite strong. I think you're continuing to see improved performance from business, from corporate travelers. Offices are continuing to reopen and people are getting back out on the road. And new international markets continue to open. We expect to see more Asian flying, for example, this coming fourth quarter than we did at any point during the pandemic.
It almost goes, entirely counter to what the economists, the equity strategists who we speak to on a daily basis, kind of what they're laying out in this anticipated recession that they are monitoring some of the brewing clouds around. To what extent does the executive team at Delta believe that the core markets that you operate in are headed towards a recession?
Well, that's a great point, and we are seeing a counter-cyclical recovery for our industry. The demand continues to be quite strong. A hectic summer will not come close to quenching the thirst for travel that so many people have longed for over the last couple of years. So we see that demand continuing. We are also continuing to see new markets opening. We're seeing businesses starting to come back, as I mentioned earlier, and people are prioritizing investments in themselves. So the demand profile is very, very strong. Uniquely at Delta, however, is not only do we have strong demand continuing, we have the ability to tap into that growth by bringing the rest of our network back. We've been the least restored airline in the industry because we've been quite cautious and disciplined about how we brought that network back. So bringing that additional capacity is going to allow us to continue to grow our top line, as well as reduce our cost profile, because we have a lot of scale and efficiency today. So you bring 15 to 20% of your capacity back up. That's higher utilization. That's not new costs, because we already have the assets and the people in place. And the best thing you can do heading into a recessionary time is to focus on reducing your cost profile. And that scale efficiency will do just that.
And there you heard from Delta Airlines CEO Ed Bastian that consumers are prioritizing investing in themselves, experiences, services, rather than buying things, at least in that most recent quarter that they just reported for. And we'll see where that demand remains intact. The team at Delta seems pretty confident that it will.